Hi guys. Okay, all right. Well, for those of you that don't know me, I'm from LendInvest. I'll just give you a quick 20 seconds on LendInvest. So we've been a lender in the market in short-term property finance for about 8 years now. We were previously known as Montello. We went over to the brand of LendInvest about 3 or 4 years ago. So, as I say, we're one of the biggest short-term property finance businesses in the UK. So yeah, just following the questions that Ranjan has kindly put to us. The first one: do we see anything changing for investors and developers looking for finance in 2017? Well, obviously, going forth here, some of my thunder's been stolen already, as I'm sure you'd recognise. But I think the key thing is it's a bit of a mixed bag, really. There's positives and negatives. So maybe taking the negatives first. I guess the biggest challenge for the year will be the market as a whole. It's obviously a very turbulent market still following Brexit. With lots of changes occurring at the moment. So I think that's clearly the biggest thing that's going to affect property investors and developers in 2017. Just drilling down a little bit further into that, obviously the PRA changes that Richard mentioned earlier, the regulatory changes that are coming in. So we've got the tapering of mortgage interest relief, we've got the stress testing of mortgage affordability. As I say, there's just an enormous amount of change in terms of and how that will affect your finances and how that will affect what type of lending you can access into the market. Looking a bit more positively, again, Paul mentioned this just a few moments ago, but I think in terms of the number of lenders in the market, that we've seen a big increase just in the last year. I think we're likely to see that continue into 2017. It's possible that some of the bigger lenders may change their approach as to what they're looking at in the market, especially for buy-to-let, but also for development finance. I would also say that some of the innovative lenders that we've seen come to the market, including LendInvest, of course, the crowdfunders, the specialist lenders, it's likely that there will be a lot more choice out there. So that's obviously fantastic news, and hopefully for property investors who are definitely being hit hardest, as opposed to property developers, that choice will counteract it a little bit. So in terms of that first question, really, as I say, it's a mixed bag, but hopefully more on the positive side. So going on to the second one, characteristics do you look for in a property project? So obviously we do bridging finance, we do auction finance, development finance. So from my perspective, when I'm reviewing property schemes, it could be anything from a sort of light refurbishment on a house right through to a new build of 20 or 30 units. So there's lots of different types of developments within that range, and it really depends on the type of the type of project that's being carried out as to what we look for. But the key things are experience. So obviously, what experience does the individual or the individuals behind the scheme have in dealing with these types of schemes? Have they on a smaller scheme? We would normally say that we want to see either a good team behind you, or that you've got at least one type of similar project under your belt already, and that tends to be standard in the market. From a development side, if it's more of a major development with structural work and so on, then normally we're looking for experience that you can show that you've got a couple of projects under your belt already. And obviously it's a bit of chicken and egg as to how you first get to that experience. So again, touching on what Paul mentioned there, that he's hoping to put some more joint ventures in place over the next year. I think that's going to be a key thing for for people. I'm sure, like a lot of you in the room, who would like to get into property development. So experience is the first point. The second point, liquidity. Obviously, we're looking at location, we're looking at unit type, we're looking at spec, value of the properties. So that liquidity of the market is key to a project. The exit, obviously with short-term finance, the exit of your finance is probably the most important thing, really, that you come to a lender and understand, you've worked backwards really to understand how you're going to finance the project, and as I say, work backwards to then realise what you need to do on day one to actually get into that scheme. So an exit, whether it's sale or refinance, is very important. And then fourth, the figures involved. So that's obviously your profitability, your credit worthiness, your affordability. So as I say, I think just summarising those characteristics is experience, liquidity, exit, and then the numbers all tally up really. So the third point, extra risks will investors, developers need to take into account for next year. I think the key things here are really a lot of the negatives that I mentioned earlier on. Obviously, there's lots of changes in terms of the turmoil of the market, in terms of changes to regulatory positions, changes to tax. As I say, they're really the main things that developers and investors will have to take into account. But then secondly, I think delivery, having a confidence in delivery in the finance that you're looking to put in place. So, as I said, there's lots of new lenders coming to the market. There's lots of different ways that lenders can provide you with financing, but understanding and having a confidence in what they can provide you. And I think building relationships, whether that's with your lender directly or whether it's through a good broker who can access and understand the type of financing that you're looking for. As I say, I think that's key about having the right relationship so that you can do that with confidence. So I think that's everything from me. Thanks, guys. Cheers.